Alright, let's go boys. Happy New Year. So this video is going to be about low volume nodes and how we can trade it with acceptance and rejection, and how we can also use it as a form of entry or continuation. And I'm going to give you multiple trade examples. So we have a little bit of a slideshow here, and we're going to we're going to briefly run through this. So if you watch my channel or if you've been on my server, you know that we use volume profile for multiple reasons. You know, it could be to find our key levels, it could be to find our entries, it could be to find our TPs. Volume profile is very universal for multiple things, and you can use it in multiple different strategies. Okay, so what is a volume profile? The key components in a volume profile are going to be the point of control, the value area high, the value area low, and a low volume node. For this example today, we're going to be talking about low volume nodes to high volume nodes, imbalances, and balances. So the volume profile identifies acceptance versus rejection, and also shows volume traded at certain price points. So what is a low volume node? Price level with very little volume, marked rejection zone, formed during fast price movement. A lot of ICT traders consider this as a fair value gap, a gap between a 3 candle closure. They aren't, very wrong about that, but there is definitely better ways to trade it, which is why I'm showing you guys this video. So where an LVN is formed from fast price movement, the only way that you can actually see a lack in buy and sell orders is using volume profile or an order flow chart. All you have to do is basically pull the volume profile from a certain leg that you are looking for an inverse or a continuation off of, or even a rejection, and you can find the pinpoint of where the highest probability quote-unquote fair value gap, or LVN, is going to hold, or if it flips for the continuation. Okay, so why LVNs matter? Price moves quickly through LVNs, acts as a rejection or a transition zone. So for the transition zone, quote unquote, it's an inverse. Basically, where there's a low volume node, there's a lack, like I said, there's a lack of buy and sell orders. For example, if we are coming up to a low volume node that was made from a fast drop to the downside, if we inverse that, that means that those lack of orders were just confirmed by buyers, and buyers claimed that level, so it is going to act as an area of continuation, which is why people normally use fair value gaps as an entry model. So if you trade fair value gaps, this video is perfect for you, and this can definitely improve your model by a lot. This will remove a lot of second guessing. So low volume nodes versus high volume nodes. High volume nodes is acceptance and consolidation. High volume nodes is when there's a lot, and I mean a lot, of price movement, a lot of auctions happening. Low volume nodes is a rejection of fast movement. The reason that this acts as a rejection is because it lacks buy and sell orders, so it's scary for either or to trade into it. If you are a buyer and you are going into a zone where sellers and buyers could not claim it, you don't typically want to be trading in that area. So it's scary for sellers and buyers to be coming down or up to a low volume node, which is why it acts as a rejection. So high volume nodes are great for TPs. It could also be an area for rejection if it's claimed by a certain party. A high volume node is also point of control. I use point of control and a secondary point of control almost every single day in my trading. A great model you can use is imbalance to balance. So a high volume node is a balanced market, it's a balanced zone, and LVN is imbalance. If you're flipping an imbalance, you are going to target the next balance. If you're going from balance, you're going to be targeting the next imbalance. So high volume node to low volume node to high volume node. So how LVNs form? Imbalance between buyers and sellers, aggressive market orders, often during session opens or news, or just very large downtrends or uptrends. They can be formed in every single leg, but very large low volume nodes are going to will act significantly more as an area of rejection than a smaller leg. Just like, daily LVN or daily for value gaps or hourly for value gaps or 5 minute or 1 minute. Okay, so LVN's a support and resistance. So like I said, it's going to act as a scary area for sellers or buyers because it has not been yet claimed by either party. Expect reaction on a retest, starting with VWAP or structure or any order flow chart, point of control, value area low, value area high. It can also be VWAP, bookmap levels. It's LVNs are something that you add to your strategy, not completely trade. I will give you guys a way you can trade it completely. It would just be from imbalance to balance, but we'll go over that in just a little bit. So trading with LVN rejection. Price rejects LVN, enter a confirmation, target high volume nodes or point of control. Point of control is a high volume node, but point of control is the highest volume node formed from wherever you pulled the fixed range volume profile. So the way that the fixed range volume profile works is it takes volume from price versus time. So if you take a volume profile from midnight to midnight, it's going to take all the volume traded from 12 o'clock all the way throughout the day to 12. So I guess it is, by price, but it takes all the volume traded by the candlesticks and shows you the breakdown of them. Okay, so trading the LVN break, which is why I'm making this video. So failure to reject is a continuation lower. If you reject off of a higher time LVN, you can take a lower time inverse LVN as a continuation lower or higher, targeting a high volume node or the next low volume node. So like I said, price moves from a high volume node to low volume node, from low volume node to high volume node. The market is always looking for balance. If it's an imbalance, it's looking for the next balance, okay? If you kind of always have that in your mind, it will make a lot more sense of what you're trading. So the best time frames for LVNs, it's going to be daily profiles. I trade the daily profile every single day. I use the previous day profile to find my value area high, value area low, and my point of control. If you haven't already watched that video, go check it out on my other YouTube videos. Session RTH profiles, this is going to be 9:30 to 6 p.m., 6 p.m. to 9:30. Either way you want to do it. This is going to be specifically for the New York AM session, or if you want to use it like I use it, the fixed range volume profile. I use all three of these, but the fixed range volume profile is specifically finding LVNs on certain legs. Okay, so common mistakes. Common mistakes: treating LVNs as exact lines, no confirmation, and ignoring higher time from context. I'm going to show you guys actually this on the actual chart instead of going over this right now. Okay, so LVN plus confluences. I use it specifically with session highs and lows, value area high and low, point of control, and I also do use it as previous day high and previous day low. LVNs are just an entry model, so as long as you were finding delta divergences or absorption, basically big, large market participants for sellers or buyers coming into the market, you are basically confirming an LVN flip with that. So if you come up to a previous day high or a value area high or point of control and you were looking to take a short, if major sellers come in, large market participants come in, you want to see an area that buyers and sellers both did not claim get flipped. So you do not want to enter the trade until the leg that you want to fully target, that LVN on that leg gets flipped, okay? Let me make sure I'm recording more fast. Okay, yeah. So key takeaways: low volume nodes equals rejection zones, fast price movements, great for entries and targets. High volume nodes shows agreements. Like I said, it's a balanced market whenever you find high volume areas, and low volume nodes shows refusal. Both parties were not able to claim the area. Okay, so we're gonna now jump into the chart example, and this is a really good example for continuation, okay? So I use AMP Futures Quant Tower. This gives me really accurate data. If you are looking to trade the volume profile, I would definitely recommend switching to a professional platform. If you haven't already watched my video on the amp quant tower tutorial, go watch that. If you also haven't joined our server, I will link it in the bio. We also have a area that you can go and get the quant tower for free for 28 days, and I have that linked in my Discord. Okay. So this is my previous state profile that I have on the left. Quant tower automatically marks this out because I have yesterday selected. So these blue areas are going to be my price discovery zones and price discovery zones. This black area is 68.2% of where price was in acceptance or in a balanced range, quote unquote, a high volume area as well. So as you can see, we have 2 point controls aligned here. These are high volume areas. So basically where we are going from here is high volume to then low volume, and then once you tap into low volume, you're going to the next low volume. Okay, so for this leg, you can go on the 15-minute chart or the 5-minute chart. If you look in the 15-minute chart, it's going to be a little bit cleaner. Okay, so if you were looking specifically at the next highest point of rejection, quote unquote, a 15-minute continuation or fair value gap or LVN, you can see there's multiple LVNs in this leg. Or I'm sorry, there's multiple fair value gaps. There's 1, 2, 3, 3 fair value gaps in this leg. So the way that we're going to find the highest probability one that's going to hold is we're just going to basically find the lowest volume area. You're going to take your crosshair and go all the way to here. As you can see, this area is the highest probability of rejection, and it's also aligned with this 15-minute fair value gap. So you're going to mark this 15-minute just like this, and you're then going to go on a lower time frame. So now that you found your higher time frame LVN, you're going to go to a lower time frame. This is the first initial test into this 15-minute LVN. As you can see, it held perfectly. The way that I would be trading this is I would be pulling a volume profile from the leg that I want to target. So I want to pull it from here all the way up to this high. Okay, so as you see, there is multiple fair value gaps in this leg. These do not matter to us. The only one that we want to be paying attention to is the low volume area. As you can see, you take a crosshair, we have the lowest volume area. This is where we want to see get flipped, okay? So you want to align this with the next fair value gap. So this is where I would primarily want to be seeing get flipped, okay? Once this gets flipped, I would be looking for a confirmation of either absorption or a tap into another LVN. So in this example, we tapped into this LVN. So as you can see, we have 2 LVNs here. If you scroll in a little bit, you can see the price dropping down in volume. We have this 164 aligned right here. As you can see, this is the lowest volume area besides this right here. But I want you guys to take 2 things away from this. The value area low in this leg is below this current fair value gap. So why would we be paying attention to this low volume node? Because anything below here is going to be price discovery. Okay, but why do you still want to be paying attention to this? Well, if this is still a low volume node in another area, okay? So if you were looking from value area high to value area low, and you look for the lowest area to be traded, it's 164 right here, okay? And this is aligned with a very small fair value gap. So I would be wanting to see this get flipped. So I'm going to move this up just a little bit if I can. Hold on. Okay, it's not letting me. So you basically align this LVN with this, with this fair value gap right here. As you can see, we held this and went higher. We then tapped into the next LVN right here at 174, even though we continue lower. We then were able to flip this LVN, and we ended up getting a retest, and then we went lower. So what I would be targeting here is either just the retest from here all the way down to price rejection on the volume profile, which basically this is the previous day's this is the lowest point that any auction was made on the volume profile. So the way that this works, this isn't actually previous day low or previous day high. when you're looking at this, as you can see, hold on, anything past this area is going to be acting as a point of rejection. Okay, so for this instance, you would just be targeting quote unquote previous day low. Okay, so now that we've identified our LVN, we then flipped and our entry and our continuation on the previous day low. As you can see, we got a rejection off of that previous day low. So now I'm going to give you guys another example. I'm going to find a random area on the chart. Let me delete all this real quick. Okay, so letting me delete this one for some reason. Going a hard time for them real fast. Okay, so if you are looking to trade the point of control, for example, this is a very choppy day, so it's actually a good way to show you guys that the model does work, because we're not just showing you pinpoint, perfect examples. I'm just picking random areas in the chart. So for this area, for example, we come up to point of control and reject, but this isn't enough confirmation for us to take an entry just yet. If you want to be targeting the bottom of this leg, you want to be pulling from this low to this high, and you want to be seeing the lowest volume area get flipped. So we're going to zoom in here, and we're going to mark out 390. This is where I would want to see price get flipped for me to take a short. And I'm going to show you why this doesn't matter right here, because we broke these highs. So if you're paying attention, this is current price action, right? And price came up here and rejected. As you can see, we then rejected it and had price discovery above the value area high. So now, if I am going to be looking for the next leg to trade, I'm going to be doing the exact same thing I just did. So if we come up to now previous day point of control, and I want to be targeting, let's say, the bottom of this leg, I'm going to be wanting to see the lowest volume area get flipped in this leg. And this is kind of a weird example. There's a lot of choppy price action here, but try and give you it as well as possible. So let's see, 347. So I say this area right here would be the best area to take an LVN flip from. So as you can see, we then came down in price, tapped into it, and then we inversed it, but then we hit our target. After we've hit our target, we are now below price discovery, and we would not want to be in this trade anymore. So I'm going to give you guys another example. I'm going to give you guys a cleaner example. So for this leg, for example, we come up to the previous day second PLC again, a very high volume area. We then started rejecting it. If I want to be targeting this leg, I'm going to be pulling it from here. Okay, so as you can see, we then have our low volume node identified as this little block here, 129. So you can see it's lower than any of these numbers. Oh, actually it's lower. I'm sorry, we have this one right here, 114. So as you can see, we do have this low volume area. And again, the way that I use this is I combine it with the fair value gap that I see. So there's a low volume area from this 114. I'm going to combine it with this leg right here. So this fair value gap. As you can see, we then inverse this, tapped into this LVN, and then rejected lower. But again, we tapped back into another LVN and failed to flip it. This is when I would be looking to go break even, is at this next low volume area, because I do not know if we're going to be able to flip this or not, okay? So this is a really good example of what is holding us up on this leg, okay? So we have one LVN and two LVNs. The way that we traded this, we flipped the LVN, we retested it, got our entry. As soon as we got our entry, we then came down this LVN, and we would be going break even here. As you can see, this trade got stopped out break even because you did not get a flip on that LVN. And again, this is just confirming which fair value gap is going to hold, you know what I mean? So now we're going to do a large leg here. Let's go on the 5 minute. As you can see, this is a pretty large uptrend here. So I'm going to pull the volume profile from the very bottom of this to the very top. Okay. So now let's find our lowest volume area. I think I've actually showed you guys this already, didn't I? I think so. Okay, so let's just do this. This can be a little easier to find. Okay, so our lowest volume area from the start of this leg is going to be near this right here. So it's going to be this gap. So if we zoom in here, we have a gap as small as 39. Oops. Oh, shit. Hold on. Where did I pull that from? Right here. Jeez. Sorry. Okay. So again, for us to target this entire leg, we want to be seeing a low volume node get flipped here. Okay. So we're going to zoom in here again. As you can see, we have a low volume node as small as 39. Okay. So this area is where I would want to be seeing get flipped and then rejected. Okay. So this is a very tricky area to trade. Okay. Look at how much volume was traded in this area. Okay. So you're going to have to pay a lot of attention to this. So as you can see, we then flipped the LVN that we were on. It was aligned with a 5-minute gap. Okay. Once we got our entry lower, we want to be targeting the next high volume area. So as you can see, we then also had multiple low volume nodes though. So let's go down on the lower time frame real fast. Okay, is this where we got our entry? No, it's up here. I think my thing just messed up. 1 second. Okay, so I think my chart's definitely glitching. It could be because market's not open right now because it's not loading any data right now for me in the 1 minute. So I won't be able to show you guys that on the lower time frame for some reason. That won't happen when you're actually trading the live market, of course. We are backtesting. Okay, so we flipped this low volume area, okay? And we then retest it and we are in the trade now. So the next area that I would be wanting to go break even at is right around here. As you can see, we have a low volume node right here, 42. So I'd be wanting to go break even here, and then I would want to be targeting the next high volume area. So imbalance, that got acceptance. So imbalance to balance, okay? I'd be wanting to take trade off in this high volume node right here. So start with this high volume node right here where it dips off in price. So I'd be wanting to take my profits here after flipping this LVN. And I really wish I could show you guys this on the lower time frame because it would look a lot smoother. So this is trading, higher time frame LVNs to lower time frame LVNs. So let me delete this. So I've given you guys a pretty good example of what LVNs are, which one we want to see get flipped, okay? Every area that you see as a rejection point is going to be aligned with the LVN. That's just kind of how it works, okay? So as you can see, we have this leg here. I already know we're going to be tapping into some type of either high volume node or low volume node here. So as you can see, we zoom in here, and we actually have we have a few LVNs here. So we have an LVN right here, and this is aligned with this overall 15-minute. We have two LVNs here combining in this 15-minute. But we also have a high volume area. So let's zoom in a little bit here. As you can see, price came up to exactly right around here. And it won't always tap LVNs to the exact tick just because it is scary for price to even come up to it. So this is a pretty common thing to see happen. So anyways, we came up and we tapped into a very low volume area here. The way that I would be wanting to trade this, as soon as I see rejection off of near an LVN area, I'd be wanting to go onto a lower time frame, and I'd be wanting to see a LVN flip from there. So as you can see, we came up to this low volume area and we started rejecting it. So let's say I want to target this leg right here, okay? All the way down to this low. So now we're going to zoom in. I would want to see this gap right here get flipped. And the reason I say that is because we have 342 right here is the lowest area I can find on this leg, 342. Yeah, it's the lowest volume area I could find this leg. We then take it to the right, and you can see we have a fair value gap right there. Okay, so we ignored all these other fair value gaps. we want to be seeing this area get flipped for us to take a trade, okay? So as you can see, we came down, kind of didn't touch it at first, we rejected up a little bit, and then came down, and once we inversed it, we are then now in this trade on this retest. So this ended up going all the way down to value area low, so this trade is a pretty good trade. Now, for stop loss placement, I normally place my stop loss above or below the LVN. One second, let me text Miguel back. Okay, sorry. So anyways, I would be wanting to place my stop loss above this right here. So again, you guys can trade this with my model or your own model. If you trade fair value gaps, definitely include this. It's going to be very beneficial for you. So I've showed you guys some pretty choppy price action. The reason I did that is because I want to show you guys that this works even in really bad market conditions, okay? So let's show you guys some better examples now. As you can see, we don't really have any clean price action here. So let's look for clean price action. As you can see, we have some clean movement up here, nice V-shaped recovery off of this leg. We have two fair value gaps here, okay? So we're gonna pull it from this leg to this high. And now we're gonna scale down on a lower time frame. Go back. Okay, I don't know why it's doing that again. So I can't scale down the lower time frame. Sorry guys, I can't really give you like perfect examples right now. I don't know why my chart's doing that. Okay, so as you can see, we're gonna zoom in here. We have two fair value gaps to pay attention in this leg. We have this one on the bottom and we have this one on the top. Now, how do we confirm that this is a proper fair value gap? Well, purely just looking at where we pulled the volume profile, you can see volume dipped right here and it also dipped right here. So this fair value gap is a valid fair value gap to pay attention to get an inverse off of. So we never ended up getting a retest on this. I'm guessing we did it in a lower time frame, but once we inverse this on either, if you want to pay attention to the 5 minute or the 1 minute, the way that LVNs work, you don't really actually need to pay attention to the time frame that you're on. You just need to see the low volume node get flipped. So that's a difference between ICT and actual volume. You don't typically need to see time acceptance, you just need to see volume acceptance, okay? So now we're going to be taking this from low volume area to high volume area. We then inverse this low volume area, and the next area that I would want to be taking this to is the next high volume zone. So if we got in about 56 here, I could take this all the way down to honestly wherever. So let's see, we have a few draws in liquidity here. We have previous day close, and we also have open, and we also have all the way down to price discovery on this leg. So again, pick your targets how you want. I normally do low volume to high volume because I like imbalance to balance. So I think I've given you guys pretty good examples on how to find the fair value gaps that are going to work. I'm going to show you guys some higher time frame ones. Let's go on the 15-minute chart. I really like the 15-minute and 30-minute for continuations. So we're going to find, let's do this. Let's find, I think I've showed you guys this already, but this is a really good example for current price action and the low volume nodes. So we're going to pull this all the way down to here, the first bounce, okay? Now we're going to scale down to a lower time frame because it's going to let me, because this is current price action. So as you can see, we have now identified our leg that we want to be paying attention to. Let me go back on the 15-minute real quick. As you can see, this is aligned with the fair value gap, okay? But why didn't we reject this one or this one or I'm sorry, not this one, but this is the one what we picked, okay? So we ignored 1, 2 gaps, and the one that we held is this one right here. It's because it's a low volume area. Again, this is just confirming which fair value gap is real, right? As you can see, these fair value gaps up here, the only one that would be valid is probably this second one up here, not this first one. This first one actually has high volume areas, which means it's not going to really act as the areas as rejection as much as a fair value gap will. I'm sorry, LVN. So this area, as you can see, is a low volume area, and we ended up using it as rejection to go lower. We then find the next low volume area right here. So you can see we retest it, come down, retest it, and then come down to previous day low. Okay, so I'm just gonna wrap this video up. I low-key yapped a lot on this video. I hope I gave you guys good examples. If you guys want another video purely just backtesting, I know I backtested a lot in this video, but if you want more backtesting, or even if you just want live trading, definitely come to the Discord server. We do free live trading every single Friday. All of my other education is free. You are not obligated to pay for anything unless you want to trade directly with me Monday through Thursday and Friday. So if you guys want any more videos like this, definitely comment and let me know for video recommendations, and I'll catch you guys in the next one.